Morning, Cam. Welcome back to Trading Success with Cam Buchanan. How are you?
Morning, everyone. Hey, Chris. I'm good, thanks. Well, very interesting week last week. The markets looked like they were going to fall off the cliff early in the week, and then we had this incredible recovery. So it was two sides of the two sides of the equation yesterday, last week. So it was fascinating to see the market movement and how much the markets can move. So I think I'm just looking at I'll bring up the charts straight away. So I'll share my screen.
Yeah, it looked like there was a similar story across most markets with that sort of recovery.
Yes, no, there wasn't a huge amount of news that came out. The news at the end of the week was probably the news that changed the market more than anything. So let me just find this screen. And that's the one I want. So, yes, so now I just got to find the chart. All right, so we analyzed last week. So at the start of the week, we looked at what day is that? So yes, that was Monday. That was Monday's trading. So this is basically the regular trading hours in the US on the Nasdaq. So this is all. It's not a full 24-hour data. It's just what happened in the regular trading hours. So last week, what we were looking at was seeing if the market could hold on the Nasdaq, could hold above this 50% level here, the weekly 50. And there was Thursday's high and another last week's high as well there. So when the market opened, the market sold off, I think, on Tuesday. We had quite a strong sell-off. And then Wednesday was a very whippy day. So the market went up and then came down and closed down on its lows. And then on Thursday, the market showed a little bit of recovery, but we had this inside candle. Now on Friday, that unemployment news came out. So the unemployment news wasn't as good as expected. So there was, I think, 175,000 jobs had been created in the previous month, where they were expecting over 220,000 jobs created. So that wasn't a great number. And then the unemployment had increased slightly as well. So the market liked those numbers because basically one of the key things that Jerome Powell spoke about last week, who's the Federal Reserve Chairman who controls interest rates, he said they'll be looking at the employment numbers to see their direction on what they're doing with interest rates, because everything at the moment seems to be hanging around, particularly in these equity markets, the S&P 500 and the Nasdaq. People look at interest rates like that's one of the key drivers of the price. So basically, with that poor unemployment situation, that could trigger the Fed Reserve to cut rates a bit earlier. So there was talk that maybe September they'll look at cutting the rates. So what happened to the market? The market rallied. It absolutely went ballistic. So we've got this, you can see here on the regular trading hours, we've got this massive gap down here. So from there to there, so the market has created a large gap. So what we're looking to see this week, and another interesting thing as well, is that we've basically got, basically 2 weeks where the market has been fairly sideways through here, like what you call a 14-day trading range or a 14-day balance. So, one of the things, with that when you've got those sorts of scenarios, when you've got this type of trading range here, you either want to see the market hold above the trading range and keep going, more for a bullish trade, or you look for the market to fail. All right, so maybe today, being Tuesday, we want to see how the market opens and reacts. If the market gets below this level, particularly primarily in the US, because the US is really what drives the market. So if the market gets below Monday's high Friday's high over here, then look for a trade all the way back down to the other side for this week. All right, particularly because we've got this gap here. So basically that's if there's a fake out to the upside, like if yesterday was a fake out, look for the market to come back inside of Friday's high, which is around about 1850. All right, watch 1850. If we get below 1850, then we'll probably be trading back into the range, right, into this 2-week trading range. Now, if the market can hold above this level, which it looks like it wants to, from Monday, it looks very positive. Watch to see if the market can come back to this 1850 and see if we get a retest of that level, and then that level becomes support.
Yeah.
So that's the kind of things that I'm going to be looking at on the Nasdaq this week. See a continuation to the upside, maybe a retest of these highs over the next couple of weeks, or we're going to come back into this trading range and we'll look to go lower. All right. So I don't know whether the market's bullish enough to break out to the high side yet. I still think we're in this larger range. So you can see here on the weekly scale, we are in this range here. So maybe if the market does break a little bit higher, comes up to 76, this could just be the retracement leg. So we could have the A leg, the B leg, and maybe we get C leg back down, maybe a retest of 17,000. In May, June, July, and then after. What I've heard and what I've been studying is that we're looking for particularly a rally coming in around July, August is when the rally is meant to really kick off again. And that should be a very strong rally into the next couple of years. So that's on a sort of a more of a macro scale perspective as well. Interesting to note also too, and this is basically down here, I've got the COT data, which is the commitment of trade data. So this is an indicator you can pull out of the NinjaTrader platform. So I've got that just running on the weekly chart because the COT data comes out every Thursday, but it's a lagging indicator because it's a week behind. But basically what it tells you is the net position of the traders. Okay, so you've got 3 categories of traders. You've got the commercials, which are the red ones. You've got the non-commercials, which are like your large speculators. And then you've got your non-reportables, which is green. Okay, now, typically what they say is that the non-commercials and the non-reportables are generally on the wrong side of the trade. Okay, so basically they're net long at the moment. Whereas the commercials, which are typically, they have the inside information, they're typically on the right side of the trade.
The big money.
They're net short at the moment. All right. Now, this is not it's not a great indicator just on its own. A lot of larger traders use it. Like I was listening to the Unknown Market Wizards the other day. There's a guy called Jason Shapiro who's a contrarian trader. Great books too. I highly recommend those Market Wizard books. You keep coming back to the same themes when you read those books, and it's all about risk management. Trading is purely about risk management, and obviously mindset is a big part of that, and sticking to your strategy and having tight risk, or just having a consistent risk amount. But one of the key things is that for this Jason Shapiro is he looks at this commitment of trade, the COT reports, and he will very much follow the side of the commercials. So if the commercials are short, then he's primarily looking for a short position. So he goes against the herd typically, and we saw that a couple of times last week, just on the 5-minute charts, just in our micro day trading. How going against the herd paid off very, very well. So I think it's an excellent strategy to look at because, as they say, majority of people in the markets lose money, and it's quite interesting. Some of his trades will be he'll just listen to what the CNBC reporters say, and he knows that some of these guys that do the reporting are consistently on the wrong side of the market.
Yeah.
So he always trades against them.
Against Jim Cramer. I hear a lot about people just trading whatever Jim Cramer says, go the other way.
Yeah, exactly. So like that just comes from like history of watching people and just basically fading the masses, really. Which makes sense because it gives you a very good risk to reward trade.
Yeah.
And we've seen that with Bitcoin recently as well. Like, there was so much, like if I bring over the Bitcoin chart, you can see there was so much hype with Bitcoin through this period here, right? This is the daily chart. And this one, everyone's talking about the halving and the halving and the halving and the halving. And the price is going to go to, people were saying 300,000, 150,000, a million, some of the speculating numbers out there, like all that sort of stuff, to the normal person is like, oh, wow, these experts know what they're talking. Yeah. We've got to buy this, right? But what it can do, it basically fuels all these people coming into the market. Now, the philosophy is when all these people are coming into the market at these high prices, there's nothing left to fuel prices going higher.
Yeah.
Like there's no more money left, right? That's kind of how a recession works as well. It's like when people get so hyped up enough that all their money is in the market, everyone's safe to be in the market, and prices can't go any higher because there's no one pushing price any higher, that, will cause the big recession, right? Like you'll see it when the big, when the property market's just booming and everyone's in, and it's like, you'll hear it on TV, people will be saying, this is, if you don't get in now, you'll miss out, you'll miss the boat. All this sort of fear and greed sort of stuff comes in. When you start hearing mainstream media really pumping the tires of markets, that's when you've got to probably trade the opposite way. So, Bitcoin, you can see here, we're in this correction at the moment. We're in this kind of, descending type range. If you run a trend channel over the sort of where we're sort of sitting right now, it's kind of, I'll get rid of snap mode. So yeah, if we run like a trend channel, well, that's probably been there was a bit of a fake out to the high side. That's probably more like where we are. So we're kind of 50% above the channel. So that the red line's being the 50%. So we're kind of holding above, but I wouldn't really be jumping into Bitcoin just yet until give it a bit more time. I think basically in this range. But when we start seeing it swing back up, now it is swung back up now. But if we get a couple of swings, like maybe the second swing back up, that would be a bit more confirmation the market's trying to go up. You can see here the first swing that tried to break out here, failed. So it needs just a little bit more time for the market to find itself. But yeah, I think there's still this year, particularly when we start seeing the bull market running in the equities, this market will run as well. Now gold once again was one of those examples of, buy the rumor, sell the fact, right? So when we started to see the war really heat up, we started to see on this particular day here, the market shot up, right? That was the Friday where we had some serious, attacks. That was I think when Israel retaliated. What's the word? Retaliated against Israel. And look, the market didn't go anywhere, right? Yeah. It was just like there was just no aggression. This is a major news announcement, and typically you think gold would just go through the roof, right? But everyone was all in at that time, so the market couldn't go any higher. And what's the market done since then? It's turned away.
Yeah.
So when you expect something to happen and you don't see the reaction from the market, it's a good idea to trade the other way. See, down here, this is where all the hype was. This is where all the anticipation. Now prices now. The war is valued into the market here right now, so price is already valued in, and there's no one can see any value anymore. So,
and as you said with the news, I remember seeing the news on a daily basis a few weeks ago. Gold, all-time highs, all-time highs, all-time highs. Now it's back to the property, going up 6%. No, gold's not being talked about anymore on Channel 9.
yeah, it's interesting, isn't it? Like, you follow the news, and go trade the other way, because it's a psychology thing, right? It's not about the price. It's about the competition, or the consumers. What's the acceptance of price? When everyone's all in the market, there's nowhere for price to go because there's no more money left.
Yeah.
No one's prepared to spend any more. So if everyone's in on the market, smart money is going to be shorting that market. Or in this situation, or if the market's been trending up for a long time. And remember, price is typically built into the market, 6 months out as well. So, these targets up here were basically targets that were, 6 months ago, that was what people thought. Yeah, this market's going to get to that. When it gets to that, my trade is done.
Yeah.
I'm going to be getting out of the market at that point. Whereas the kind of dumb money is kind of coming in at that point.
Yeah.
Now,
because like that, they've been watching the news and listening about it and thinking, oh, I better buy some gold.
Yeah. Well, that's what the masses do, right? The masses follow the mainstream media. They love it. They're programmed to it, right? It's just the way we are. It's safety in numbers.
Yeah.
The early adopters are the ones that get rewarded, right? They may have to pay for it in terms of time, but the patience, they get paid for patience.
Yeah.
Whereas as in trading, impatience typically doesn't pay, and it doesn't matter what time frame you're trading. Patience and discipline to your plan and your risk is just so important. But also, I think understanding how prices work and how markets work, and that can be very confusing for a lot of people, because new people come into the market and think, oh, there's a negative news article, prices should go down, but prices are going up. Like Nasdaq and the S&P. What did the S&P do last week? Well, S&P had fairly negative news. You'd think employment numbers were down, unemployment was increasing. What did the market do? It's gone up the last 2 days. Well, last 3 days, it's had 3 really strong bullish buy candles. So that's the S&P as well, right there. So, we got above those 2 levels, or those 3 levels that we spoke about. We're above the 61.8, so the 76 at 5,250. Once again, very similar to Nasdaq. We're in basically a 14-day trading range, or a 2-week trading range, 2 whole week. So we wanted to see the market hold above, that price there, 5,165. If it can hold above 5,165 over the week, then we're probably going to be seeing higher prices in the short term. But if the market fakes out and comes back into 165 or 166, around that price there, I'd look for a trade back down to the other side, over a long period of time. But as we're short-term traders, obviously, you've got to really hone in on your positions and look at your liquidity zones and your fib levels, and basically really find those double tops and triple tops, and just pay a bit of attention to the news as well, and to see what could be driving the price. But that's the kind of way I'm playing the equities this week. Is either going to see a continuation. If it fails, then look for a short, and look for it to, if it gets back under those Friday highs in Nasdaq or S&P, look for shorts. last one I want to look at is oil. Oil has been once again a bit of a victim of news. Everyone was hyping oil up around here, and particularly with all the wars going on, there's going to be trade embargoes and all these sorts of things. The only thing now with oil is that America is a net exporter of oil these days. So what's happening in the Middle East isn't going to affect oil price as much as what's happened, say in the past. So if there's strife in the Middle East, America can still, if they stop, if they want to put an embargo on America for oil, then that won't affect things so much. But so that's I think we're just seeing a typical rebalance after such a strong rally in oil. But I think oil is still going to be bullish later in the year, but it might be sort of back into this range at the moment. So the 50% level is going to be key around 76. See if there's some buying coming in around that. $77 price mark. I'm looking forward to later in the year. I think we're going to see some real strong movement in the stock market. But at the moment, things look like they're just holding off and just in a bit of a range at the moment.
Yeah, just times for now, as you say, to be careful, be patient while it's and keep that risk management in check, so that when the boom does come, you're ready to go.
Yeah, that's right. And that's it. Is wait for that money to come back into the markets. Looks like there's a bit of money has come out of the markets the last couple of weeks. So, or last maybe 3 weeks, 4 weeks. There's some money on the sideline. So wait for the big boys to come back into the market and drive things around. But can't really see that happening at the moment. So anyway, that's about it, Chris, I think, for the week.
Fantastic. Excellent. Well, thank you very much, Cam.
Yeah. Just one thing too. There's not a lot of red flag news as well on Forex Factory this week, and I haven't looked at the earnings reports as well this week. But next week we'll have a little bit more at the earnings as well.
All right. Fantastic. Excellent. Thank you again, Cam.
Thanks a lot, Chris. Bye, everyone. See you next week.